Hey, this is an update on Dash. I've covered a lot of information on Dash and some of the other crypto updates because it's gotten much closer to our lower major support than pretty much every other coin except for EOS, which broke its support. And we may have a downside setup in place. We went over the downside in Ethereum and Bitcoin, as well as across the altcoins the other day in my one of my previous updates. And Dash looked like it had a 5-wave setup up. Relatively convincing, like Bitcoin Cash. We can make out a full 5 waves up. So there's a chance that we still have our bullish setup in place. It hasn't quite invalidated yet, although we do have some ominous signs developing. So here we have potentially for red an ABC up. Now, before I dig into the details of that, I'm going to back up just a bit just to go over what our crash looked like and whether or not we have more of a downside setup to go. So we started crashing way back in March, actually, end of March. We had what looked like a diagonal setup up, and Dash had some of the cleanest upside patterns of any of the altcoins or any of the cryptos for that matter. But then after what looked like a nice 4th wave pullback, we start turning down, and Dash was one of those coins that didn't quite have a full 2nd wave bounce. So we had a bit of a substandard pullback. Typically, you want to see a 38.2% retrace. Didn't see that. So long story short, we start pulling back sharply, and we were expecting a low, or the 5th wave of an impulse, which would typically target between the 1.764 and the 2.0 extensions. But we actually exceeded that. We went all the way down to about $43, which got very much closer to support than I would have been comfortable with. We'll be looking at that on the big picture chart momentarily. But we hit that, and then we've been bouncing ever since. Most of the other coins actually hit their supports as expected. And with Dash, like I said, if we actually look at it, we can make out 5 waves down. So again, all the waves hit their targets. The 2nd wave was a bit shallower than expected, and our 5th wave was a little extended. So other than that, we've had a bit of a bounce. If you're looking to buy the dip, that was a chance to buy the dip. I did disclose that I did sell my positions before the major part of the descent. It wasn't perfectly timed, obviously, but I was able to buy back by the time we were about here in the probably the 54 something dollar range, something like that. And you can never really time these perfectly. You never know when the bottom actually is. So if you bought the dip, great. If we rally off, even better. But I wouldn't be as concerned if I didn't see more of a bearish development in the works. So there is an alternate pattern that could have this be a zigzag up, an ABC in red. And if that is the case, we may have already started our descent. We have what can easily be classified as a 5-wave pattern. Then you got a 1, 2, 3, 4, 5 of impulse. And we have a corrective looking 2nd wave that had about slightly deeper than standard retrace for a 2nd wave. And then we actually did break through our pivot zone, which is the 0.618 to 0.764 extension. That's what this box is. And we've broken back through. So that's usually a sign that we've invalidated our immediate downside setup. And we've seen similar bullish action across the crypto space today. It wasn't just in Dash. Bitcoin has also done similarly, in which we haven't invalidated the red pattern completely, but we've invalidated the immediate setup, because if we were following through on an impulse down, we should have followed this orange arrow straight down. That was the time for it to break down, and it failed. So that's a sign possibly. Ethereum fall through a little bit better. However, it also has broken back up the other way. And Bitcoin Cash, as I've been mentioning, using that as a proxy, we broke a lot of supports. There was a lot of reason to be concerned, but we've bounced here as well. So all the coins are showing at least a little bit of a maybe a breath, a little bit of hesitation before we have anything. So while our immediate downside setup has broken, it's still, we're not seeing any signs of any kind of very clear rally yet. You can count this as a 5-wave rally up. That's a 1, 2, 3, 4, 5. I like it, although there's a little bit of overlap between the 4th and the 1st wave. So it's not the strongest sign, and we need to see this thing rally a good bit higher before we're convinced that this crash is over. So that's what we're looking at. If we start turning back down, there's a chance we could see much lower. We're seeing a similar situation in the stock market as well. This is the ES mini futures, which is representative of the S&P 500. That's the futures that trade around the clock. And we were talking about how we had what looked like a really clean 5-wave setup in impulse off of our low on May 12th, which is when cryptos got lower, hit their low. So you have 1, 2, 3, 4, 5. It could be counted as an impulse very cleanly. But at the same time, there's a chance it's actually a C wave bounce off of an A, B, C correction. And this latest dip is giving us a lot of warning signs. This is a very ominous sign that we may have that lower low coming. We're looking for us to retrace into this box overhead. And if we don't make it through the top of the box in impulsive fashion with 5-wave impulses up, there's a very good chance we have a lower low. This thing could crash down well below the low that we had last week. So I mentioned this because cryptos and the stock market have been moving in lockstep. It's been eerie how similar the patterns look, even if the percentages up and down are not the same. The structures, the Elliott wave patterns look strikingly similar. So that is the short-term outlook. Big picture, as I did mention, I've actually cleaned this whole thing up. So we have our red primary pattern, which says that we're done with our crash. I know that this red isn't exactly the red here, but bear with me. That says that we actually did finish our crash and we're about to bounce. And as you'll notice, I mentioned we fell deeply through our target range box. I wasn't looking for us to get this low, but we've done that actually. And well, that's about as low as I'd like to see us go. We really shouldn't go any lower than that if we are going to maintain this pattern. When we look at our MACD, our MACD, divergence is still there. We're starting to see this thing curl back up. So there's more signs that we're done, but we're not out of the woods. As I mentioned, there is that alternate pattern. The red pattern on this 5-minute chart more or less corresponds to this orange alt pattern that I have on this chart. This is one that I've added to most of my coins. My nomenclature is that the red pattern is primary. We followed through on all the coins on a pullback. The orange is looking for a slightly, maybe a marginally lower low. In the case of Dash, 38 would be the next fib extension down, $38. So we could see a brief spike there and then turn back up. Otherwise, we have major support below us, which is 34. So there's a chance we hit that and bounce back up. That would be a double bottom. The reason this is important is that our low from March 2020, that was the origin point of our first wave. And in Dash, at least, I know it looks funky, but all the internal waves actually hit their targets as you'd expect. If you look at this as a first wave, third wave hit just above the 1.32 extension, and our fifth wave just perfectly hit the 1.764. So it was ideal. This looks like a really nice impulse from a Fibonacci standpoint, proportion standpoint. So I really don't want this to break. But if we break support again at 34.33, then that invalidates this. And there's a bit more of an ominous potential here too. The same applies to EOS, which actually did break its support very clearly. I know I had not been talking about Dash as much, but EOS had the same thing happen, and it took a while to get back above support. Well, we're barely above it right now. But what this means is that our correction off of our 2017 high haven't fully completed yet. So that would make this entire thing, I'm actually going to draw this out to make it a bit more clear that this whole drop from 2017 all the way down to March 2020 was actually the A wave. This whole rally up to May 2021 was a B wave, and we may have lower to go. I'm actually going to increase the font size on that if possible, maybe. Let's see if I can make this major. I just want to make this thing stand out a little bit more. Sure, we'll use that super cycle. So A, B, C. I'm actually going to change the color to make that stand out just a bit more against the background. But that means that there's the potential. If we break this support, that means this 1-2 is invalidated, and therefore this is a C wave off of this bigger correction. So once again, an A wave, B wave bounce into the May 2021 high, and we may be in the middle of a C wave. And that could mean that we've had a series of nested 1-2s here. This could just be the beginning of a larger correction, or maybe we're more than halfway through, but we're not as close to the bottom as we think. I don't like this pattern right now. I don't have this on the chart as an actual alternate at the moment because orange is my lower low alternate. If we do break that support, we're going to have to start thinking about where it could go down. So if I zoom back up based on that pattern I just demonstrated, if we have an A equals C ratio, so A wave and C wave, they're the same length, which is a common equivalence. $10 is the lower support. So I know it sounds terrifying that we could go to $10. Again, I don't see this as a strong possibility. And I would actually expect us to see more of a bounce and consolidation if we are going to see lower lows like that. So we're going to have some warning before it happens. I think we're quite stretched at the moment. I don't see that happening right away. But if you have a lot of allocation Dash, I wouldn't be against unloading some of that. Again, if you're trying to buy the dip in any of the cryptos in general, not just Dash, could be a good chance. Again, I keep mentioning if you need that money for something, probably better to take some off the table. You can always get back in once we have a bigger rally setup. And I always mention we want to see a clear 5-wave impulse up from wherever our low is. You want to see 1, 2, 3, 4, 5. Whoops, that was really ugly. Up to 5 waves. And then you want to see your 3-wave pullback off of that for our second wave. And that is how you get your classic 1-2 setup in Elliott wave theory. So once we see something like this, I would be sounding the buy alerts. And again, people will be asking, why didn't I make it clear you should buy? Well, it depends on your strategy. It's always risky to buy the dip, especially if you buy it as early as I did. So we always want to see a bigger sign of some upside ahead. So as I mentioned, if you are looking to unload, you can do some of that if you are a bit more risk averse. In my case, I decided to unload some of my positions, including Dash, but I'm still probably holding onto more than half my crypto holdings at the moment. Things may change over the next few days. I'm waiting to see what this consolidation looks like, but my full intention is to buy the dip back when we get lower. So for many who've been holding for a long time, maybe better just to hold through any kind of lower low, because it's very dangerous to unload too much when you're near a bottom. It's very hard to catch the rebound on the other side. And as I mentioned, if you're looking for a safer buying opportunity, I'm going to have that out there once we have a bigger impulsive setup. So that is today's update. Let's see how things unfold. Subscribe so that you don't miss any updates. And until next time, thank you for watching and happy trading.